Hello, everyone. Today, we're exploring the exciting world of investing in multiple companies. Diversifying your investment portfolio can reduce risk and increase potential returns. Let's discuss some effective strategies to make it happen. Step 1. Understand your investment goals. First, it's important to define your investment goals. Are you looking for long-term growth, regular income, or a combination of both? Understanding your objectives will guide your investment choices and help you select the right companies to include in your portfolio. Step 2. Research potential companies. Once you have your goals, start researching companies that align with those objectives. Look for firms with strong fundamentals, healthy balance sheets, consistent earnings growth, and a competitive edge in their industry. Utilize resources such as financial news websites, investment platforms, and analyst reports to gather data and insights. Step 3. Diversify across sectors. Next, diversify across different sectors to minimize risk. Instead of concentrating all your investments in a single industry, consider investing in companies from various sectors like technology, healthcare, consumer goods, and finance. This way, if one sector underperforms, others can potentially offset those losses. Step 4. Utilize investment vehicles. To make investing in multiple companies easier, consider using investment vehicles such as mutual funds or exchange-traded funds, ETFs. These funds pool money from various investors to buy a diverse range of stocks, allowing you to achieve diversification without needing to purchase shares in multiple companies individually. Step 5. Monitor your portfolio regularly. Once you've made your investments, don't forget to monitor your portfolio regularly. Keep an eye on market trends and each company's performance, and be ready to adjust your holdings as necessary. Rebalancing your portfolio periodically ensures it remains aligned with your goals and risk tolerance. Conclusion. In summary, investing in multiple companies can greatly enhance your financial success when done thoughtfully. Start by defining your goals, researching potential companies, diversifying across sectors, using investment vehicles for ease, and monitoring your portfolio regularly. With these strategies, you'll be well on your way to building a robust and diverse investment portfolio. Thank you for your time and happy investing. Please subscribe, like, comment, and share to help others.